There's a number that splits people into two groups. On one side, you've got the majority, stuck, treading water, living week to week and hoping nothing breaks. On the other side, you've got the people who hit a certain savings threshold and suddenly everything starts compounding. Not just their money, their confidence, their decisions, their entire trajectory. That number is $50,000. And if you're watching this video, you're either close to it, past it, or trying to figure out why it matters so much. Today, I'm going to show you exactly why everything changes even more after you save $50,000 and why the version of you on the other side of that number is almost unrecognizable from the person who started. Let's start with the maths. Right now in Australia, high-interest savings accounts are paying anywhere from 4.5% to over 5.5% per annum. Let's say you've got $50,000 sitting in one of those accounts at 5%. That's $2,500 a year in interest. That's roughly $208 a month being deposited into your account while you sleep. Now, that might not sound life-changing, but think about it this way. When you had $5,000 saved, that same 5% gave you $250 a year. That's about $20 a month. You probably didn't even notice it. At $50,000, the interest alone starts to feel like a second income stream. And if you move that money into an index fund like VAS or A200, where historical returns average around 8% to 10% per year, you're looking at $4,000 to $5,000 a year in growth. And here's where it gets really interesting. That $4,000 to $5,000 doesn't just sit there. It gets reinvested. So next year, you're not earning returns on $50,000 anymore. You're earning returns on $54,000 or $55,000. The year after that, the base is even bigger. And every single year, the gap between what you contribute and what your money earns on its own gets smaller and smaller. Eventually, your money is doing more of the heavy lifting than you are. That's how the maths works when you give compounding enough runway to operate. But the truth is, the maths is only half the story. The biggest shift that happens after $50,000 is psychological. And this is the part that actually changes your life. When you're saving from $0 to $50,000, every dollar feels heavy. You're grinding. You're saying no to dinners, no to holidays, no to impulse buys. There's a low-grade anxiety that follows you everywhere because you know your safety net is thin. You check your bank account constantly. You feel guilty when you spend. You're in survival mode. And that's completely normal because at that stage, you're building something from nothing. But something shifts once you cross $50,000. The anxiety starts to quiet down, not because your problems disappear, but because your relationship with money fundamentally changes. You go from, I hope I can cover this, to I know I can handle this. That shift from scarcity to security is massive. You stop panic selling investments when the market dips because you've got a cash buffer that gives you confidence. You negotiate harder for a pay rise because you're not terrified of losing your job. You stop buying cheap things that break and start buying quality things that last because you can actually afford to think long-term now. You say no to bad deals, bad debt, and bad advice because you've got enough runway to pause and think. The research backs this up. Studies in behavioral economics consistently show that financial stress reduces cognitive function. When you're worried about money, your brain literally has less capacity to make good decisions. Crossing a meaningful savings threshold removes that mental tax. You get smarter with money simply because you're less stressed about it. And that creates a positive feedback loop. Better decisions lead to more money, which leads to even better decisions. And this doesn't just apply to investing. It shows up in everyday spending too. When you've got $50,000 behind you, you stop making rushed purchases out of panic. You don't sign up for the first insurance policy you see because you're scared. You don't take the first loan offer thrown at you because you feel desperate. You compare, you wait, you negotiate, and over a lifetime, that patience saves you tens of thousands of dollars in fees, interest, and bad deals you would have accepted when you had nothing in the bank. Here's something else the data tells us. The average Australian has about $42,000 in savings. That means most people in this country are sitting just below the line where the real acceleration kicks in. Once you're above $50,000, you stop playing defense and you start playing offense. You're no longer just trying to not go broke. You're actively building something. And that switch from protecting money to deploying money opens up a whole new set of moves. You can start thinking about diversification. You can split your cash between a high interest savings account for your emergency buffer and an index fund for long term growth. You can look at dollar cost averaging into the market every single month without worrying that one bad week will wipe out your safety net. You've got enough margin to take calculated risks, and calculated risk is where real wealth gets built. Now, there's another shift that happens after $50,000 that almost nobody talks about. Your identity changes. Before $50,000, you might have called yourself someone who's trying to save. After $50,000, you become someone who saves. That sounds like a small difference, but it's everything. Because once your identity shifts, your habits lock in. You stop relying on motivation. You don't need a budget app to guilt you into putting money aside. Saving becomes automatic. It's just who you are now. And this identity shift creates a ripple effect. The people around you start to notice. Your stress levels drop. You make different choices. You carry yourself differently. And that attracts opportunities. Better job offers, better relationships, better partnerships. Because people are drawn to stability. They can sense when someone has their life together, even if they can't put their finger on exactly why. There's also a hidden danger at this stage that I want to be honest about. Once you hit $50,000, you'll feel a pull to reward yourself. You'll start thinking you've earned a splurge, a new car, a big holiday, upgraded everything. And look, there's nothing wrong with enjoying your money, but this is the exact moment where most people sabotage their own momentum. They hit a milestone, celebrate too hard, and slide right back down the hill. The people who build real wealth treat $50,000 not as a finish line, but as a launch pad. They keep the same habits. They keep the same discipline. They let the snowball keep growing because they understand that the magic isn't in reaching $50,000. The magic is in what $50,000 becomes when you leave it alone and keep stacking on top of it. There's one more thing worth understanding about this stage. After $50,000, you start attracting information differently. You pay attention to tax strategies because you've actually got money worth protecting. You start reading about salary sacrificing into super, claiming deductions properly, and structuring your finances to keep more of what you earn. $50,000 is the threshold where maths and mindset collide, where the numbers start accelerating and your brain starts operating differently at the same time. You become a different person with a different relationship to money, and that different person builds wealth at a completely different speed. Now, if you haven't hit $50,000 yet, don't let this discourage you. Let it pull you forward, because every dollar you save right now is pushing you closer to that tipping point. And once you cross it, you'll feel the shift. The game changes. The speed changes. You change. And looking back, you'll realize that the grind to get here was the price of admission for everything that comes next. If you're watching this channel, you're already thinking differently than most people. You're already ahead, so keep going. The snowball is building, and once it starts rolling, nothing is going to stop it. If this video gave you something valuable, hit that subscribe button and the notification bell so you don't miss what's coming next. Thanks for watching, and I'll see you in the next one.